Good morning, everybody. It is December 29th, 2023, 8:56 a.m., and we are here once again for another market open. Folks, this is the last trading day of 2023, which is, it's kind of crazy that we're here. We've been through a market open. How many trading days are there? I think we've done a market open pretty much every single day of 20. There's, I think, maybe 1 or 2 days we missed. But we've been here every day, rain or sunshine. And now we're here on the last day of 2023. I am sorry I am late. I sneezed almost 20 times in a row today. And it got to the point where I was just like, do I need more blessings in my life or something? Is that why I'm sneezing so much? Because it was like every 5 seconds I would do another sneeze. And this was at 8:40 a.m. I usually go live at 8:45. And I was like, I can't go live. I just don't know if the sneezes are going to stop. So I was sneezing a lot. The fever is gone, which is a really good thing. So the 100-degree fever back down to 97. We're good. But my nose was just very stuffy last night. So I did a steamer. I got some Vicks, and it hurt a lot because when your nose is stuffy, it's hard to sleep because it's just all clogged up in your nose. So I woke up this morning feeling a lot better. So that's out of the system, but it is still kind of there. I think by officially tomorrow, the sickness that took up the entire December 26th kind of week holiday that people, have, this entire week has been dealing with this thing. It's gone. So hopefully it'll be gone tomorrow. So that's why I'm late today. But yeah, it sucks because I'm usually so prepared for these. I have a bunch of stuff ready to go. I'm excited to do this. And I feel like every day I just have not been prepared. I've not been super, super ready just because I wake up and I feel like shit. Nonetheless, I think that's going to change in January because we'll be coming into the new year. If I was going to get sick, I haven't gotten sick in 2 years. So I was like, all right, if I'm going to get sick, I might as well get sick at the end of 2023. And let's bring in 2024, which starts on a Monday, which I love. It starts on a Monday in a much more healthier note and in a much more interesting note because we're going to have a brand new market to analyze in 2024. So today's going to be the last day of analyzing 2023's market. This is going to be really, really exciting because we are just a couple of points away from ending all-time highs on the S&P 500, which means that if we can end at we're at 476 right now in the pre-market, down just 0.03%. If we can end at 478 or 479, I think, by the end of the day, that's it. We had a year that beat 2022 in terms of, or that beat the all-time high in 2022. And that rebounded massively from 2021. So we got a lot to talk about. I want to go through a bunch of different stocks, some of their returns. I want to go through some of the Bitcoin companies, the miners, what's going on there, different things I'm thinking about. Bitcoin right now at 42,800. And let's see towards the end of the year, really, can we end in a much more positive direction? Ty Gordon, Brad Appeal, Tony, Mikkel, Stinger, John, Mr. Russo, Juan Carlos, SJ, Ken, the real good one, Toby, Zocold, Martin, Philip Rizzo, Dale Strat, Bay Ray, Matt R, Brown Group, Joseph Villegas. Thank you all for being here today. Cold Monkey, David, Top Dasher, Freddie, Sethi Roth, JS, Bryant Robinson, Brad Appeal. All right. Thank you all for being here. Franz Baker. Someone said, is Amit still sick? Yeah, Amit is a lot better than he was yesterday. So getting a lot better. I think we should be good. And 2024, I think we got this sickness out of the system. My mom was like, do you need to go to urgent care or something? And I was like, no, there's no way. I don't need antibiotics or anything. I just need some rest. The problem is I wake up every morning and I want to do the show, right? So it's I never get that real, because I sleep super late because I can't sleep during the night. And then you wake up and then you have to get yourself ready, do the show, get excited, get your energy up there, which is just hard to do when you're dying inside. But it's not that hard to do because I love doing this. So I get through the show, and then after the show's done, I'm dead. And then I just don't recover throughout the day. Yesterday, I slept 2 hours last night. I was like, all right, I'm gonna do the show and I'm gonna go to sleep. And I woke up actually an hour before the show. So I really got ready. And then I do the show. I get into bed right after the show, and then I just can't fall asleep. And then an hour later of just laying down in bed, I just get up and I start going back to work. And then that just kills your body because you really didn't get any sleep. So I think I should be good going into January, and we should be good to go. But we can't miss the market open. We can't miss, especially not on the last day of trading. Not the last day of trading. Are you doing New Year's Eve late night stock talk? Maybe. Not sure, not for sure, but maybe. So I definitely don't have any parties I go to on New Year's Eve, so I might be able to do that as well. Billy says, good morning, Amit. I'm here. We can get the show started. All right, let's get the show started. So this is the last trading day of the new year, or of 2023. And I want to go through a bunch of different things that happened in 2023 that were incredibly important and go through a little bit of a trip down memory lane and discuss kind of what we should expect. In terms of actual news this morning, nothing too crazy is going on. A couple quick headlines I'll run in through. Google has settled a $5 billion consumer privacy lawsuit. Why does this matter? Because Google has been in the headlines for basically effing up every single week for the past couple of weeks. They lost the Epic Games lawsuits. They lost the they faked their Gemini video. So I mean, they have to pay another $5 billion. The stock was down a little bit after hours. Right now, the stock is at what do we got? The stock's down 0.08%. Yeah, the market doesn't really care. So this is a lawsuit referring to Google illegally tracking how like your cookies and your and like your clicks on the internet. And so I don't know who they got sued by, but they got sued by somebody. And now they were like, all right, we're just going to settle for $5 billion. Obviously, Google definitely tracks all the crazy shit we do, and like that's how the advertising is that good. So they're like, you know what? We're just going to pay $5 billion. It's a little traffic ticket, and we'll move on from there. So that's one headline that happened for Google. This was particularly in the incognito mode. So you guys know when you go incognito and go to the little funny websites, you know the websites I'm talking about, the fun websites. Yeah, they track everything that you do when you're on the fun website. So they said Amit tells me good night, then continues to tweet for the next 3 hours. This is also my problem. I said good night yesterday, and then I just started tweeting like 17 different things about the market, which is hard. So Amit, don't turn off the stream. You'll have the energy. That's true, man. The stream. I mean, dude, for Finance Junkies, we went for 3.5 hours. I was dead. I was literally dead, and we went for 3.5 hours. And then Steve yesterday, he was like, "Oh, let's do it again." And I'm like, "Steve, I think I actually have to sleep. If I don't sleep tonight, I think I'm gonna collapse." So that's why we couldn't do it last night. The other thing is the 10-year. So 10-year is ticked up a little bit. This is what we saw. 10-year still below 4%, which is absolutely incredible. Right now, 10 years at 3.885. Healthy level below 4%. So continuing to see that 10-year go down. That is going to be really good for the broader equity markets to have a chance to consolidate and do what they need to do. What are the fun websites? The fun websites are cnbc.com/quotes/US 10-year. I mean, this is the most fun I've had in a minute, seeing that 10-year fall below 4. Remember this 10-year was at 5 and there were people thinking it would get to like 7 or 8. I mean, dude, if the 10-year gets to 8%, the S&P would be like 34. I mean, it would be bad. Like we would not have this end of year rally. So seeing this S&P at 3.89, that was a really good thing as well. So overall, I mean, quick headlines this morning, nothing too crazy. Google has $5 billion in consumer spending they have to do. Brazil's unemployment fell to a near 9-year low. South Africa posted their widest trade surplus in 16 months. And Spain inflation has unexpectedly eased in December as well. So internationally, those are a couple different things that happened. I would go deeper on them, but we got some other stuff to talk about. Nonetheless, it's just showing that there is more economic stimulus across the world in terms of trade activity. There is less unemployment, and that inflation is cooling around in places like Canada, the UK, and now in Spain. One other quick tidbit is that Turkey raised the annual wage, the like minimum wage they have in the country by like 49% to combat rising inflation. Inflation right now is closer to 70% in the country. This is where you have to be really thankful that if you live in a more Western developed nation, because when you have 70% inflation, raising the wages by 50% is only going to make inflation worse. Like it's not really going to resolve the issue. And that's why, that's why, like when people say you can just keep printing money, it's like, dude, no, like if you actually just keep printing money, there are ramifications, there are problems. And Turkey is a prime example of what could happen. So, I mean, J-Pow had a mandate this year to fix inflation. And, by all sense of the imagination, he's done a really good job fixing inflation. Now the question is if he can continue to fix inflation. And if he can, the equity markets are going to benefit. So that's what we've got in the beginning of the market. Nothing too crazy outside of that. All right. So let's get into some of the other stuff I want to talk about. So Today's the last day for trading. I want to go through some of the stocks that have had a really good year and kind of discuss the year they've had and why they've had the good year that they've had. And I want to know what stocks you guys have ultimately invested in as well, and what stocks have given you, solid returns this year. So I kind of want this to be a little bit of a community thing in the chat, right? I want you guys to put in, let's frame the question like this. Let me pull up the Webull. Put in the 3 stocks that have given you the highest returns this year. If you have 3 stocks that have produced returns, those can be from options. Those can be from just pure stock. Those can be from one-time trades, whatever it may be. You can open up your brokerage right now, take a look at it. Put in the 3 stocks that have actually given you some returns. And if you want to post your year-to-date return, you can post that as well. So let's do that. And while you're doing that, I'll go through that in a second. I want to also post, I'm going to just go through a couple of different things I see. ARK Innovation, as of yesterday, sorry guys, a little bit of cough still left in here. ARK Innovation, I posted this yesterday on Twitter. ARK Innovation is up 70% year to date, which is pretty incredible. I mean, look, it topped out at 160, bottomed at 29 in December 2022, now at 54. A lot of people were like, oh, well, if you zoom out on ARK, even though they're up 70% year to date, they're still down 50%, whatever. I think that argument doesn't make any sense. If you look at Amazon, if you look at Palantir, if you look at SoFi, if you look at Tesla, I mean, SoFi was $30 at one point. Now it's 10, barely. So the SoFi's up 100% year to date. And you don't see anyone saying, oh, SoFi's a fake return or anything like that, right? Same thing with Palantir. Palantir was at 45. Now it's at 17, and it was at 6 at one point. That's why it went up triple digits this year. Same thing with Tesla at 100. Now it's at 250. So to me, I think Kathy deserves all the credit in the world from getting 70% year-to-date return. She beat the S&P. She beat the NASDAQ. She beat the QQQ. So I think they're legit returns. You still have to manage a fund to get those returns. The problem is she obviously promised 50% annual compounded growth rates back in 2022. And that's where it's like, all right, your promises do not match the actual performance of your stocks. So that's the hard part to reconcile. But 70% year-to-date returns are good. I mean, look, she beat the S&P. And so I think that is overall something that she deserves credit for. And anyone who, even if you YOLO'd everything into Tesla at 100, you deserve the credit if you have returns. Returns are returns. I don't care how you get the returns. Returns are returns. So zooming out doesn't really matter to me, because if you have 70% year-to-date returns, and if you had an average of ARK at $80, you had plenty of time to DCA. If you didn't DCA, that's on you. At the end of the day, it's like, dude, you bought it at the top. You got DCA. If you had DCA'd, you would have had maybe not 70% year-to-date returns, but at least somewhat, good year-to-date returns. And I think we still need to give credit where credit is due. So that's ARK. Let's go to the S&P. S&P so far has returned about 23% year-to-date. We bottomed at 380-ish or 379-ish. Yeah, so 380-ish back in January. Now we're at 477. So nice little 20%, 22% year-to-date return. Might close it in at 25% if we can get to some higher levels today. I think the market rallies, and I think the market will get those. I think the market will get to all-time highs today. I'm putting it out there. I could be wrong, but I think on a day like this, it will happen. There was a really interesting clip I want to play for you guys as well that I saw last night for why the market is also rallying, why fund managers are allowing the rally to continue to happen. So we're going to take a look at that in a second. It was from Josh Brown. I thought it was a really interesting argument. But nonetheless, we got the S&P rising as well. A couple other stocks, and then I'm going to get to some of the stuff in the comment. Robinhood is up about 50% year-to-date, $13.20. The stock bottomed at $7.94. Now it's at $13.20. My only regret is that I did not buy heavier at $7.94. I bought the bulk of my stock at $10, and I understood it, at $7.90, but I didn't make the buy trigger until 10. That is the only regret I have on this, but Robinhood performed this year as well. CleanSpark is up 500% year-to-date. Pre-market $13.29, up 1.34%. This is one of the best Bitcoin energy miners. Amazing performance, up, I think, more than about 530% year-to-date. CleanSpark has done really well. Truist and the regional banks, they are still down about 20% year-to-date, but they have recovered from that low of 26 up to 37. Nice little 10-15% run. And the reason they've run is because if the Fed is going to cut interest rates, then regional banks, all types of banks, are going to have less losses on their loan portfolio, which is going to help their tangible book value. Big tech, Microsoft is up. Apple is up. Google is up. NVIDIA, monster quarter, $497. Let's see if they can close in on $500 today. A variety of companies this week or this year have been up when it comes to big tech, and they've done what they needed to do throughout of the end of the year. Let me get to some of the comments you guys have, and then I'll talk some more about different stocks that went up this year. So let's see. My question was, what 3 stocks have given you the best returns, and how did you get those returns? So we have Dimitri says Palantir, SoFi, Rocket Lab. That's interesting. John says Tesla, Palantir, Rivian. Rivian. We got Matt saying Tesla and Amazon. The great one saying Meta, Palantir, Tesla. Lang saying NVIDIA, Palantir, Costco. That's a nice mix. We got Style saying Amazon, Palantir, and Fubo. Palantir, Bitcoin, Ethereum. SoFi, Hut, Hims by Wong. That one is interesting. Hut and Hims you got in there. Tesla, Palantir, Shopify up $100,000. Apple, Enphase, Palantir. Fubo, Meta, Palantir. Palantir, Appcelera, Rocket Lab by Blake. Cash King, Tesla, Rivian, Uber, Ephemeral Phrase, Intel, Palantir, Apple. So it seems like everyone has a little bit of Palantir in there. Some people have NVIDIA in there. We got Palantir, Meta, Tesla, SMCI, CleanSpark, SoFi. Yeah, a lot of people got some Palantir in there. Palantir, SoFi, Celsius. Everyone has Palantir and then 2 other names, whether that's SoFi, Tesla, NVIDIA, and then some other stuff. Palantir, Microsoft, RKT, stocks, Amazon, Shopify, Fubo. Shurish says, admit I'm up a lot on SoFi and Palantir. Is it better to sell off a bit going into 2024? That's up to you personally. I wouldn't sell. I mean, I would just let it kind of play out going into 2024. I think it's going to be a bull market. So I'm not really selling a lot. And I would, if these are long-term holds for you, I wouldn't worry too much about it. Like if it falls back down to SoFi at $8, Palantir at 15, those are just buy the dips. You don't have to stress out too much, to be honest. That's my opinion. I would let it play out. JS with 176% year-to-date return. Philip Rizzo up 150% this year. Underperformed just pure Bitcoin, of course. Not bad at all. Bitcoin's up around 160, 165%. June says Palo Alto Networks, CrowdStrike, SoFi, Palantir, Adobe, Lilly. Not bad. So everyone seems to be up this year. It doesn't seem like anyone is down this year. And everyone has a variety of 3 stocks, all of them including some of these technology names. I don't see anyone saying Pepsi or some of the other, value plays got them up this year. Amit still sick, bullish on Pfizer and Moderna. Oh boy, I don't have any pharmaceutical stocks. Pfizer, I'm still looking at. I haven't decided to buy it yet, but Pfizer's still at the at the decade lows. Gordon Johnson is down, dude. Is this portfolio public? That must be crazy if you're down this year, isn't it? Like that must be pretty wild to be down this year. Let me tell you guys my portfolio right now. So right now I am up 113% year to date. So that is looking at my Robinhood right now. And we'll see how it ends out throughout the rest of the year. The biggest gains for me have been options, quite frankly. Biggest gains have been Truist options, Hood options, and I think SoFi options. Yeah. Palantir, again, you guys got to remember my average is 15. So that's why I keep saying I want 15 and below to keep buying, because I want to get that fucking average down below 15. I hate seeing 15. I want to see 14 or like 1490. Like that would make, even if I see 1483, that would make me happier than seeing 15. So Palantir has not been the majority of my gains this year just because, the fucking average is at 15. It's not at $6 like some of you guys who discovered my videos when like SoFi and me like buying it at 5 is how I feel where you guys bought Palantir at 6 because you discovered it for the first time, where I discovered it at 30. And I was like, oh, $30. Why not? It's just $30. Like, and I didn't really know, like, it's almost $100 billion market cap. That's probably too expensive. And, it is what it is. So we DCA down. But that is, those are my returns year to date. This is the first year where I've been up more than 100% year to date. We'll see how the year ends. Options are very volatile. Maybe by the end of the day, it's not 100%, but 113%. And to be honest, it was, I'm looking at the chart right now. July 31st, it was 126%. So July 31st, remember that like fake top we had in the market where the S&P was at 460 and then we crashed? I was up 126%. It was the best. And then we got to the point where I was up 7% October 27th. So I went from being up 126% in the year in July down to being up 7% for the year in October. And then the last 2 months, we recovered back up to 113%, which is kind of crazy because like I remember in October, like end of October, where I looked at my portfolio and I was like, damn, dude, like I just felt so bad for not selling everything in July. And I was like, I was up more than 100%. And now I'm barely like, I'm up 7%. Like it's just not the best return. But granted, the entire market collapsed. So if you just stayed patient and I rebalanced, I moved a lot of stuff around and then I made some heavy plays at the end of the year. That's what, resulted for the rest of the returns. And so that's what we were able to do. Did you make the trades yourself or most were with Chris? The only trade I made with Chris was Truist. Everything else was by myself. Now Truist helped a lot, obviously, because Truist. Oh, sorry, Google. I also made some Google options with Truist with Chris. So Google and Truist were Chris. But in general, I feel like Chris was a lot of the portfolio this year because Chris taught me how to do a lot of portfolio allocation, a lot of option strategies, a lot of risk mitigation. Like the only reason I sold out of a bunch of 2025 options was to give myself more time premium. And that was not a Chris suggestion because he actually told me to keep the 25 options, but that was a kind of Chris principle, which is like, I would rather not have the anxiety at night of knowing my options are going to expire in 365 days versus the gains. Because if I kept my Truist options for 2025, I would be up a lot more. I would be up closer to 100, like 60%. Because like I checked the numbers, like Truist is doing really well and 2025 is closer than 2026. So the options are going to start printing higher. But I couldn't live with the anxiety. I really couldn't live with, I was like, I do not want to go. Because if the Fed didn't pivot, I mean, if Jerome said, yeah, we're going to be higher for longer, then Truist would be fucked, just like a lot of other stocks. So to me, before the Fed pivoted, and I think that was my biggest mistake, but I don't really call it a mistake because at the end of the day, you can't time this stuff. Like no one knew what was going on in Jerome's head. If I didn't rebalance my portfolio before the Fed pivoted, I would be up closer to like 150, 160% right now. Because I wouldn't have sold out of a ton of positions and they would have printed like crazy. But I didn't know if he was going to pivot. I got very scared that higher for longer was going to be a real thing. Because again, CPI didn't really come down in the past couple of months. It's been like 3.2 to 3.1, right? We haven't really seen a massive decline in inflation because we went from that 4 to 3%. So my thought was Jerome's going to be hawkish and I should get to 2026 options versus 2025 and let that, theta decay not kill me. And as a result of that, like I rebalanced in a lot of different ways. So I think that principle that, Chris kind of teaches about risk mitigation has been, deep in my portfolio. I remember when you had options for my sister. I still do. Her options right now. Let me show you guys those options. I haven't showed you guys those in a while. These are her options right now. This is her SoFi position. She's up $16,170. So if SoFi gets to, and this is the Robinhood simulator, right? This is why I love Robinhood. So this is what you can do, right? This is me increasing SoFi price. If SoFi gets to $12, you guys see this? Yeah, you see how I'm increasing the price? Her max profit would be $28,456. Now that's by Jan 2025. I'm probably going to be trying to sell around August-ish. So like right around here. So it depends on where SoFi is. But if SoFi gets to $12, which it's at 10, gotta get to 12 after being GAAP profitable. I think so. I think that's possible. I don't think that's crazy, right? Like that's not saying $20. That's not too crazy. I'll be able to hand her about 20 grand if that happens. So hopefully that does happen because she deserves the money and I would love to give it to her. I would love to also, make her see what it feels like to just like take some decisions in the right way and make some money. But her position is doing very well on SoFi. So now we just got to have SoFi continue to execute and, we'll continue to go from there. Bitfarm calls. Yeah. If I kept the Bitfarm calls as well, I would be up even more this year. So we'll see what happens at the end of the year. You're up 0% unless you took profits. That's a good thing. So let me actually say how many profits I took because I actually have the number in my head. So Jesse, thank you for saying that. This year, I took $11,000 in actual profits. Yeah, that's the correct number because 9,500 plus the other 1,500. Yeah. So $11,000 in profits were taken in 2023. Now I don't think I'm gonna have to pay taxes on any of it because I looked at all my losses as well. I had losses from like years ago that I just got out of those positions, and it's pretty much the same. Down around, I think I took like $12,000 of losses from like previous years of just stupid positions I had that just were down, right? So I think I'm not gonna have to pay like taxes on them, any major taxes. But I booked 11 grand in profit this year from the stock market, and the rest is just up on paper. And a majority of that 11 grand, so about 9,500, was in the last 2 months. Really, the last month, I started taking a lot more of those profits. November and November to December. So that's another good question. Put in the chat. How have you actually taken profits? Like that's a really good question, right? Like, yeah, you might be up, triple digits. You might be up a lot. Who's actually profited? And take a couple minutes to calculate if you need to. Give me a rough number. Have you actually taken some profits and put that money in the bank? And one of the things I think is really important. I took some early profits on a couple of different positions I had that I probably shouldn't have. If I just left them for another 2 weeks, I would have been able to double the profits. But the reason I took those profits is because at some level, I feel like the stock market is not real until you take profits. Like until you see that money go to your bank account and you can actually spend it on, some food, or you buy something with it. Like this iPad was bought with some of these profits, right? Like until you buy something with the stock market profits, it just feels like a game. And so that was another reason I took profits, because the entire year I'd barely taken profits until November. And then in mid-November, I was like, you know what? Like I need to see this money actualize in my life. It can't just be on the Robinhood, portfolio. Like I need to really feel it. And I took some profits, and I took a bunch of it. I put some of it away for taxes for next year. I put some of it away in savings. Like I really just spread it out and said, the money is in my hands, which is it is, I think, a psychological thing that's really important at the end of the day. Just to, even if it's not a lot of money, just to feel that the money's there. What are you up on paper this year? On paper, 79,000 on paper right now. Now, I think 10,000 of that is my sister. So call it 69,000, 70 grand. That's what it is on paper. 70 grand. Yeah. So if you take out 10 grand from my sister, 79 grand, we got 70 grand on paper. So, that's what I'm up this year. And that's out of that 70, it would have been like 80. So we took the 10 grand in profits, and we'll see next year what it can do. If next year is the year that we think it can become, maybe it can be more than that. And we just got to keep working and see if that actually ends up happening. I tax harvested, no profit. Well, that's good. At least you tax harvested, which is still a good thing at the end of the day. You can only use $3,000 of carryover losses from previous years. Yes, that is correct. But if you have a net negative on your portfolio, it doesn't matter, right? And I think I still have a net negative because I took some losses from previous years that were actually substantial. So it still won't be paying taxes. Growth Stock Wiz took 16,000 in profits. Okay. Took profits to pay rent while I was unemployed. Look, you got to do what you got to do. That's important. Are you paying her taxes? No. Again, remember for my sister. Oh, you guys are talking about for my sister for her. So if I take out the SoFi profits for my sister, which hopefully is around 20K next year, that's going to be her money. She's going to have to give me like 3-4 grand to pay taxes on that. So I'm not going to pay her taxes there. But I took out her initial capital, which I put in 12K, and I gave that back to her. But even with taking out that as technically profit, I'm still down for the year. Like I have to look at my P&L in terms of the previous year's losses that I took. So it's still I still don't have to pay taxes on anything that I got this year, just because things are still down, which is good. It was nice to see. But she'll be paying the taxes on that next year. Angela says over 90,000 in dividends, took one stock loss for taxes, did not sell anything else, up high 6 figures on paper. Damn. See, that's goals. 90,000 in dividends is where I want to make some money and then just take that money. Hopefully I could take 6 figures in the next couple of years and just dump it into dividends and just actually have dividend income coming in, 3,000-4,000 every single month from dividend income. That would just a dream. That would be amazing just to see that come in every single day. Amit, what % cash are you sitting on? 0, actually. I'm 0. I don't have any cash anymore. I'm out. I'm in the markets. Gilf Magic says, took 10K profit, replaced the roof on my rental. That's not bad at all. Did you sell losers today to help your tax bill? I sold them a couple weeks ago. So yes, it's really helping my tax bill, but I sold them a while ago. Mark LeBlanc took approximately 30K profits this year. CDN Canada, the 0.37 USD. Okay, so not bad. So people have taken profits, even though you guys are up. Some of you guys did not take profits. Kind of disagree, but only because I'm young. Time is on our side. Yeah, I agree. I mean, look, this is why I'm not really investing in index funds and things of that nature. I agree. You definitely don't want to always take profits, but sometimes just to make it feel real, the profits help as well. VC, thank you for the $9.99 super chat. APCX will be a 30x and beyond. Big things happening. Start prepping some FJ episodes for that one. Happy New Year. I'll put that on the list. We'll take a look at that one. APCX. I'll hand that over to Chris and see what he thinks about that as well. If you think taking profits is real gains, you'll never have real wealth. I agree. I mean, I agree with that as well. Look, at the end of the day, I'm not the biggest fan in the world for taking massive profits at all. I just think at some level, it has to feel like you're actually in the markets. You know, it's not just like on paper. And so sometimes taking a little bit of profits helps to realistically make you psychologically feel that you're still in the game. Amit, on Robinhood, can you pull up a win-loss at any time of the year? If so, where do you do it on Robinhood? I actually don't know. I think if you just click on the 1 year, year-to-date, all-time on Robinhood, it tells you like how well you're doing. But yeah, I don't know if they have a pure win-loss for the year in terms of a P&L, necessarily a profit and loss. I had to email them to get my actual P&L. And so that's how I knew that, I don't actually have to pay taxes because I have losses from previous years that are offsetting a lot of it. So, they need to add that feature, but if you just email them, they can also give you that information as well. Okay, we got about 3 minutes until the market opens. So basically, we started talking for the past 20 minutes. I didn't even notice. We were talking about our gains for the year. So that was good. I think it was really nice for everyone to basically say, what are the 3 stocks they're using? What are the 3 stocks they're making profits on? Myra says, are you using margin? No, I am not. I thought about it because Robinhood offered me 50 grand and they were like, hey, buddy, we see that you're investing here. We've got $50,000 at an 8% interest rate. You wanna get a little margin? And I thought about it for a second. And I was like, I shouldn't do this. I shouldn't do it. I don't feel that confident in myself as an investor. Not yet. I'm still really stupid when it comes to this stuff. So, I do not use margin. I mean, look, margin is just, for me, it's a little scary. I will use margin eventually when I feel like I need to have a baseline portfolio of like, I don't know, like 300, 400 grand, like some like mid six figures where you're really comfortable with the amount of money you have. I think low 6 figures and below 6 figures margin is a little tough and kind of scary to use. So I need to build up the portfolio a lot more before I get into margin, because margin, when you use it effectively, it's a really, especially if you have a good interest rate on it, it's a smart thing to do. It's not that hard. It's not that stupid, especially if you're not gambling with the margin, if you're using it in a very safe way and doing it into something where, the return is rather safe. Certain covered calls, certain cash secured puts, etc. But if you're just using it to YOLO, then it gets in a tough spot. Don't use margin as an I on you on cash converts. You don't pay the actual interest. Yeah, that's another thing. I mean, Adam's saying right here, use margin as an I on you on cash secured puts. I agree. There's so many ways to use it with options, but you don't need to do it in a YOLO way like a lot of people do. There was a guy who killed himself after using margin. He was down 700K on Robinhood. Let's just say that was not a good PR day for Robinhood, because they gave him the margin. I don't know why they gave him the margin, but then he was down 700K and he literally, the kid was 20 years old, it was tough. It was a tough thing to see that. And his parents were so upset. They're like, how could you give it margin? All this stuff. So it can get kind of scary, when you borrow someone else's money and you have to pay it back. It's kind of like you're in the mafia. It's like an Italian boss and shit. So I think you need to have high 6 figures in a portfolio and know what you're doing with margin to effectively use it, in a meaningful way. You can use 1K of margin. It's interest free. That's the other thing of Robinhood. They do give you $1,000 of margin if you're gold, and it's interest free. So it's basically like $1,000 free bucks to just use it. So that is one good thing on that Robinhood is able to do a margin. Okay, so the market's about to open in 15 seconds. For the past 30 minutes, we've all talked about our stock returns towards the end of the year. Feel free to still put that in the chat. Put in the top 3 stocks that have given you a return, your percentage return year to date, how many profits you took, and how much you're up year to date. All of us just put it in the comments. So if you feel comfortable sharing, please share. This is the last time in 2023, ladies and gentlemen, December 29th, 2023. We've done hundreds of these episodes all year. Thank you for being here. It has meant the absolute world to me. 9:30 a.m. Let's see if we finish off the year strong. The stock market is now open. Wake your ass up. Here we go. Ladies and gentlemen, the stock market is open. NVIDIA, $499.77. NVIDIA trying to get that 500 by the end of today. Let's see if it can do that. S&P, flat, basically. A little bit green, a little bit red. 476.71 now. basically up 0.01% for the day. So S&P is flat. ARK Innovation also down a little bit, 0.42%. Celsius is down 0.78%. Nike up 0.42%. Nike, not the best earnings, but Nike, as you can see, went from 127, it went from like 115 down to 109. Right now at 109, up 0.35%. Cypher Mining, this bad boy is up 2.7%. Bitcoin energy stock or Bitcoin mining stock. Coinbase, 186. The Bitcoin mining stocks are now 2% on the day. Riot, 4.8%. Marathon at 29.40. I saw some price targets yesterday. Marathon at 50, which probably could happen if Bitcoin moons, but that's what some people were aiming for on that. CleanSpark, 13.26, up 1% on the day. Robinhood, 13.09, minus 0.53% on the day. Beto, the thing that Kathy bought, up 0.70%. She bought 4.3 million shares of this. This is a Bitcoin strategy ETF. So that bad boy is up a little bit on the day. Let's see what else we got. We got Bitfarms 3.41, up 2.71% on the day. Apple 194, PayPal 62.85, Microsoft 376, Tesla 253, SoFi 1024, NASDAQ 15,103. We're going to be talking and doing a little bit of end of year recap on some of these stocks, but I think the big theme of the year has obviously been big tech and Bitcoin energy miners. That's been the theme of this year. Big tech, Bitcoin energy miners. Now, obviously, everything has gone up really well. So, you could say that small caps have done well towards the end of the year. Regionals have done well towards the end of the year. But in terms of what has produced outsized alpha in the market, it was the Magnificent Seven. Almost all of them up 50 to 70% year to date. Many of them up triple digits like Tesla and NVIDIA. And then you've got the Bitcoin energy miners, which towards the end of the year, from October to December, have beat big tech dramatically. 500, 600% year to date within a couple of months, just because those bad boys mooned when Bitcoin mooned as well. Palantir 1748, AMD 150, AMD in the 150s now. Not bad. AMD was at 118 last week. NVIDIA 499, Bitcoin 42,820, MicroStrategy 668, flat on the day. Apple 194, Amazon 153, Meta's at 358. Meta also incredible story of the year, hitting all-time highs or 52-week highs, and Enphase at 134, Unity 42, breaking that $40 level. Unity's top was 50. So Unity had if you bought Unity after the CEO debacle they had, you made some money on Unity. You've made some money on Unity. It seems like that was a great dip to buy when it came to Unity. So not too bad in the context of Unity, and seeing that end up playing out the way it did. So we got Unity there. We got Uber at 62.70. We got Hut Mining 16.64, up 3% of the day. Snowflake 201. Costco 661. Overall, we're green. We just need some more buy side pressure to come in order to get that S&P to all-time highs. We got it. I think we're going to make it this year. I think we're going to make it. I really do. Palantir will end the year red today. Maybe. It's red right now. Obviously it's up a lot this year, but today it might be red. And again, I talked about this yesterday on Twitter. Palantir is up so much year to date, but it doesn't have any more buy side pressure. Let me actually pull up that post. The buy side pressure is gone. We talked about the short report last night. Shorts have started to cover because they're scared of Palantir pulling a $23, $24 on them like they almost pulled last time. But the problem is there's not any big buyers left. And I remember I told you guys I had this conversation with Adam back in November. I was like, I don't think there's any more buyers towards the end of the year. So if you look at it right now, the run to 21.85 got shorts very, very scared, and they covered aggressively. However, we are out of big buyers for now. It's why we haven't participated in the Fed rally. 2024 catalysts are S&P inclusion, Titan $1.5 billion contract, AIP scaling commercially, more larger bids for NHS-type government contracts across the world, new products like VR software for the battlefield. And I think they're going to introduce new products as well, like just random new shit we haven't even, discovered, like stuff like AIP type of products, even though, we haven't heard about anything yet. So the shorts are scared. We're up 17% in the past 3 months, but there's not enough buyers to be able to deal with the fact that shorts are scared. And this is a really interesting conundrum that we're in, that shorts are scared when shorts shouldn't be scared right now, technically. Technically, if you don't have that much buy side, demand side pressure, shorts should be doubling down. But the shorts saw what we did from 15 to 21 within a matter of a couple of weeks. And I think that really scared them that, when Palantir runs, it does run, and you don't want to be short when it runs, because when it runs, it can get really scary. So my expectations for Palantir going into Q4 are that if we don't hit our growth numbers, the street's probably going to send us to 15, which I'm not sad about. If that happens, I will buy.
it'll be okay. But if we hit our growth numbers, even conservatively, like we beat expectations better than what we thought it would, we might not see 15 again, especially if we're in a better interest rate environment. Like it might start to get to the point where 20 is a normal, 18, 17 is a normal. I mean, we haven't gone below 17 since the Israel-Hamas situation, since the midweek of October. That's when we spiked to 17. Oh no, we came right below to 1480 right before earnings, and then after. So basically, since November 7th or November 3rd, since November 3rd, we have not fallen below 17. Which, I mean, if that goes into February, that feels like 4 months of consolidation to me. That's not that bad. That's not that bad at all. So the question is just, if we can actually sustain those levels. And if we can, then I think we're in a much better situation as well. So we'll see what happens with Palantir, but so far that's not too bad. Baby says we're out of money, not the desire to buy. Yeah, I mean, I think a lot of people are out of money by the end of the year as well, not just the institutions. So they're waiting, I think, for a broader dip or for something else. Here's a video I want to play. I want to show you guys this. I was listening to this last night from Josh Brown, and he was basically saying why the rally has continued. And he's making an argument that not a lot of people have made for why the Santa Claus rally has been a not really Santa Claus rally, but an interesting type of rally. I want to play this because I thought it was such a true thing that he said. And it really shocked me. And it's probably correct about how and why the market is rallying towards the end of the year and what might happen in going into 2024. So here's his perspective on why the market is continuing to do well at the end of the year.
Thank you, boy. Happy New Year. Good to see you. I don't call it a Santa Claus rally. I've been around for a long time. I call it a career security rally. What you're basically seeing is people who don't want to get fired from the asset management business in January. And we see this in years where there's just enormous performance going into Q4. A lot of the things that people were worried about end up not happening. And then all of a sudden, professionals look at their asset allocation, look at the degree to which they're trailing whatever their benchmark is. For some, it's the Russell 1000. For others, it's the S&P. For some, it's the S&P, but in real life, it's actually the NASDAQ because they pitch themselves as growth managers. But this is a phenomenon that takes place across the entire spectrum of professions on Wall Street, whether you run a mutual fund, closed-end fund, separately managed account, wealth management CIO, outsourced CIO. You might be somebody that's at a family office. It doesn't matter. In the end, you cannot have a NASDAQ up 50%, cannot have an S&P 500 up 25%, and be sitting with the amount of cash that a lot of people are sitting on. And that's why last week we had the largest single-day inflow of all time to the SPY ETF. That's not delicate. That's not a sniper rifle. It's a shotgun. It's get me in. I don't care how. We'll figure out the particulars after. And it's not surprising that you'll see this carry through to the end of the year. So Santa has nothing to do with it. People want to keep their jobs. We talked about this on the show pretty much nonstop for the last 8 weeks, and that's exactly how it played out. Merry Christmas.
All right, Josh Brown says staying employed is really the gift that keeps giving. Brent, I'm going to come over to you. Josh says it's not a Santa.
I thought that was a really interesting point, right? This idea that if you're a fund manager, and it is correlated with the statistics that we've seen, if you're a fund manager that has missed out on the rally and you need to get in, last week, the S&P 500 got $40 billion of inflows. That is the highest we have seen in the history of the S&P, of the stock market. $40 billion in 1 week. And so I think his argument is very correct, which is that if you're a fund manager and you've missed out, you've got to justify to your clients that you're in the rally, you're trying to make money. And as a result, there's all this institutional FOMO that props up the market. So even if you wanted to sell, you can't really sell because you need to keep your money in. If you haven't sold, or if you do sell, you've got a ton of money ready to buy whatever you're selling. So if there's any dip, right, that money's like, all right, get me the hell in at 470, 469, whatever, which is why that dip we saw to 469 was eaten up within hours and it went back up to 472. And you've got money coming in and they're saying, you know what, get me in, let me keep my job. It's time for me to get into the markets. So I think that actually made a lot of sense. And I think that's just going to continue, as Cash King says, to help the Mag 7 as well at the end of the day. They are going to, get a lot more momentum at the end of the day. I did enter a new position I want to tell you guys about. This is the position that I entered. It is a $5,000 position. I told you guys I was going to be thinking about it by end of week. I decided to make the decision, and I'm just going to roll with it. Clean Spark. I am in for 2025 options. I have done a spread on Clean Spark. I bought the $15 call. I sold the $20 call, and I have paid an average cost of about $1.08 per contract. As you can see right there. And the spread maximum can potentially be $5 a contract. So this is a 4x if it works. Or this is a 4.5x or whatever. It's like, let me do the math right now. No, it's a 5x. It's a 5x if it works. I'm probably not going to wait until it gets to a 5x. I'd sell it like a 2, 3x. But if Clean Spark, the way this works is if Clean Spark gets to $20 by January 2025, this 5,000 will basically become 25,000 if it actually gets to $20. Even if the 5,000 becomes 10 or 15,000, I would be very happy with that. But it all depends on Clean Spark getting to $20. Now, why did I do this? A couple of reasons. Let me actually make this a chapter as well. So put it in the chat. So I told you guys on Monday that I saw the miners running and that I was going to do something on the miners. And I looked at all the miners throughout the entire week and I said, what are the best miners that I have the most confident in? Even though the miners have run a lot. Okay. So yes, the miners have run a lot. That is correct. No denying that. But Bitcoin is not at all-time highs yet. We haven't had the ETF approval. I think Cathie Wood selling for like $10 or $20 million of stock and plumbing it into a Bitcoin ETF means that from an institutional perspective, she definitely expects the ETF to get approved. A lot of other people expect the ETF to get approved. And we haven't had the halving event yet. So you take into account that the Bitcoin miners have run 3, 4, 500% as Bitcoin has gone up from, what has it gone up from? From 30,000 or 27,000 to 44,000. Okay. Bitcoin is not even reversed to the mean in terms of its all-time highs. So I would say if Bitcoin's going just back to the all-time highs, you got another 20,000 to run on Bitcoin. If you got another 20,000 to run on Bitcoin, the Bitcoin miners, not only are they going to perform as Bitcoin goes higher, but the halving event in particular is what did it for me. That means that the reward the miners are going to get because the supply of Bitcoin decreases in half in terms of the amount that is made per mining. It means that those miners become more valuable for the Bitcoin that they actually mine. So from that perspective, I was like, okay, so the miners actually do have a thesis towards them. It's not like some just like pie in the sky YOLO. It's actually, the YOLO is Bitcoin has to go up. If Bitcoin goes down, you lose your money. Like it's just that simple. But if Bitcoin goes up, these miners are going to perform with it. So then I had to ask myself, do I think Bitcoin's going to go up? Unequivocally, I think that 2024 is going to be a good year for crypto. I could be wrong about that. All of us could be wrong about that. All the biggest hedge fund managers in the world that are doing this type of allocation could be wrong about that. But I think that it's going to do decently well. I mean, I think it's going to at least get back to some of the highs that it was at before, which means if Bitcoin's going to do well, you got to have a way to play it. That's kind of my play on Robinhood, even though Robinhood's more of an actual business. But the question then becomes, what's the best play? I think CleanSpark out of all the miners, in my opinion, is the best play. I looked at Marathon, looked at Riot, looked at Hut, looked at all these guys. CleanSpark seemed to be the best ones for me. So from that perspective, miners, guys, shut up. You guys know what I'm talking about. Goodness gracious. So from that perspective, I was like, well, wait a second. If CleanSpark is the best miner, in my opinion, energy miner, then I think it's going to do well. Now, if you look at CleanSpark's max chart, it was at $38 all time. Let me pull this up to you, which is still a 3x from here. Okay. So CleanSpark all time, or not all time. If you look at it in 2021, when we had the rally. So let me go to 2020. It was at 38 or $42. So we both showing 48, Robin is showing 38, but let's call it $40. Okay. So the sucker hit $40 when Bitcoin was what at January 2021? Let me track Bitcoin right now as well. I believe Bitcoin was closer to 40,000 in 2021. Let's see. 5 years. We're talking about January 2021. Bitcoin was at, Bitcoin was at 32,000 in January 2021. Now it peaked at 59 or 64,000, but it was at 32,000. So Bitcoin was at around 32,000 when CleanSpark was at $40. And that was from, it doesn't really matter about the actual prices. It matters about the exponential rate of rise when this happened. Bitcoin now is at 40,000. CleanSpark's at 13. CleanSpark is obviously mooned from $3. I think there's another 2 to 3x left in this sucker. I think there is. I missed the big run, like a lot of us, which it is what it is. It happens. But I think there's a run left. And so this is a $5,000 bet that CleanSpark can get to $20, which is $7 away, which I don't think is that crazy given how we've seen the rise. If we can get Bitcoin back to that 50, 60K level, I think the thing hits $20 pretty easily. And then I can 5x this $5,000. And I might put another $5,000 in it just because I have, $5,000. I'm just like, you know what, might as well just do it. So I might do that. I'll let you guys know if I do it. But I think that's the strategy. That's how I'm playing the miners. I know a lot of people are playing it in different ways, but to me, CleanSpark is the best energy miner I've seen. They've the one that I've done the most research on, and I haven't done that much research on the other guys. And from that perspective, let's see what happens. If it works, it works. If it doesn't work, it doesn't work. So that is the core thing I would want to focus on. And for the people that are saying this is gambling or whatever, I mean, you can say it's gambling. It probably is some level of strategic gambling, but to me, it's more of a hypothetical simulation on what I think is going to happen in 2024. If it is unequivocal to me, it's not rocket science. If Bitcoin goes up, the miners are going to follow. It's just that simple. If you believe Bitcoin goes up, buying Bitcoin at 42,000, the alpha that exists in Bitcoin from 42 to 60, again, Bitcoin has to go to 82, right, for it to double 84. I don't know if Bitcoin gets to 84. Maybe it does. But if Bitcoin gets to 84, CleanSpark options are definitely 5xing. And so my 5x is in the CleanSpark options versus in the Bitcoin. My alpha is in the CleanSpark options. If it's wrong, and if it's wrong, I'm probably not going to lose the 5K. I would maybe lose 1 or 2K at the end of the year if it really if Bitcoin shits the bed. That'll be okay. Because I'll sell out before that happens. But if I'm right, you got about 14 months for this to work. There's a decent play, I think, to be made on the miners. So that's my trade. That's how I'm playing it. That's how I want to position myself. I want to have some exposure to the miners. This is the only exposure I have, really. So I don't have a portfolio full of this stuff. The risky part to me becomes when you get like 30 or 40% of your portfolio stuck in the miners, because then you are attached to so much volatility on crypto that if crypto shits the bed, your portfolio shits the bed. But like, this is what, I don't know, 3-4% of the portfolio. I don't think that's that crazy to have that there. I really don't think that's that bad. So that's what we're doing right there. How did you get those for $1.08? You got to do a spread, right? So this is the other thing Chris taught me this year. This is the thing, like, when I feel much more comfortable talking about options, I'm going to go way more in depth on this. By the way, I am starting a podcast with a good friend of ours. I'm not going to say his name yet, in 2024, and it's going to be an options podcast every week. So once a week, we're literally just going to talk all options. So everyone who wants to learn about options, that podcast will be your way to geek out about options. The reason I like doing spreads is because when you buy a call and sell a call on top of it, if you buy a naked call, you have to pay an absurd amount of premium. If you sell a call on top of it, you are getting premium from the market, which is offsetting the premium that you're using to buy the call. So for example, right, let's look at CleanSpark. CleanSpark at $15. If I were to buy just a straight $15 call from January 2025, this is why I don't even like buying regular calls anymore. I don't get why people do it. I think there's just so much more potential in the spread. I would have to pay $580 right now. You see that $15 call? $580, 5.80, which right now there's 16,000 open interest, which makes sense. There's 16,000 people that have these contracts, or, that's why the premium is higher. And this $5 call, this $15 call, by the way, let's look at the historical movement of it. This $15 call on CleanSpark, it is up 264% in the past month. Okay. So it's up a lot, right? And that's because obviously I've missed the run. Now, I could either pay $580 and buy a $15 call on CleanSpark, which is a lot of money, but if CleanSpark goes to the moon, it'll do well. Or I could buy that $580 call and then I could sell a $20 call for $450. You see the sell, $20 call, $450, right on top of it. So then you do 580 minus 450, 5.8 minus 4.5, and you're left with a premium, a spread price of 1.3 that you have to pay. I paid $1.08 as my average, but it's going for 1.3, right? Or sorry, it's going for 130. I paid 1.08. So I actually got a 22-cent discount because I got it to fill at a better order. Now, what are the downsides of this? Because you might be thinking, oh, wait, so you can buy a call and sell a call on top of each other. So you can still get a 4 to 5x and pay way less premium than buying a call. What's the downside? The only downside, which isn't even a downside to me, which is why I'm so much more bullish on call debit spreads as an option strategy than just buying naked calls, especially when something has run up a little bit because you got to reduce your premium, is that your profit is capped at 4x, meaning $15 and $20, right? So 20 minus 15 is 5, which means it's a $5 spread. So 5 times 100 shares is $500, which means the max you can make per contract is $500. I paid, let's just call it $1, right? I paid $1. So I paid $100. $1 times 100 shares equals 1 times 100 is 100. So $100 per contract. So the highest amount I can gain per contract is $500 because 20 minus 15, $5 spread. What I paid for it was $100. 500. So there's a $400 profit. There's a 5x. Am I upset that I could get a 5x if CleanSpark goes to 20? No. So why the hell am I buying the $15 call to try to get a 6, 7, 8x, right? The reason you buy a naked call is because the option theoretically can be like a 50x. If this, like, imagine CleanSpark goes to $100, right? Those calls can literally just print and print. This is how Meet Kevin made a lot of his money back in the Tesla days, where I think he had like a couple $100,000 of call options on Tesla in 2020. Tesla 20x'd. So those call options, they turned into millions and millions of dollars for him, right? Because he had those calls on Tesla. Now, those calls can like go up in infinity if the stock just keeps going up and up and up. I don't think CleanSpark's going to like $1 billion. I think CleanSpark could theoretically go to $20, which means for me, if I can make a 5x off a spread, which means my profit is capped. So that's the quote unquote downside. Your profit is capped. I'm sorry, but I'm not that greedy. Like if my profit is capped at making $400 a contract and I paid $100 for it, and that's a 5x, I'm okay with that. So what the spread does is it eliminates the massive premium you're paying to buy the call, but it also allows you the alpha of a 3 to 4 or 5x, and you can sell it at a 2x, sell it at a 3x, and I'd be pretty happy with that, without having to have the stock get to these massive levels in order for you to profit from this unlimited amount of gains you can get from the call options. So that is the benefit to it. Matt says, if the stock runs up in the short term, you make less on spreads than you would on naked calls. You make money on spreads closer to expiration. 1,000%. So if CleanSpark goes to $30 tomorrow, my spreads are not going to be worth as much as if I had the naked, $10 calls on CleanSpark. But that is a risk mitigation that I would, be willing to take because I don't want to pay that much premium because I don't know if CleanSpark's going to run to $30 tomorrow, right? I'm hoping it can get to $20 in the next 7 months. So to me, that is the benefit of actually being very calculated and not as gambling like on your options, because you actually know what your profit is, you know what your premium is, you know what the max profit you can make, and you can actually time an exit strategy and understand like, oh, I can exit at XYZ price per contract because I know there's only XYZ upside left to the entire strategy based on the level of alpha I can get from the actual contract, since I know exactly what my profit is, what exactly is my cost, and what exactly is the limit to my profit based on the nature of the spread. So it's a much more calculated gamble, in my opinion. That's why I like doing the spreads. So for anyone who's curious, that's kind of why I did it. Angela says, just checked going into 2024 with 22 stocks. How about others? Yeah, let's answer that question. Who's going into 2022 with how many stocks? Or how many stocks are you entering 2022 into? How many options are you entering into? That is a good question. So CleanSpark down on the day, 1305, Palantir 1756, S&P 476. We're trying to get S&P to 479. We got to get S&P to 479. If we can get S&P to 479, we can get the full year. Get a new camera instead of options. I hate you guys so much. I hate you guys. Truist at 3730, Baba 77, Riot 1774, Robin at 1307. We got a little bit of a flat market today. SoFi 1018. It's not that exciting on the last day. And so I guess we will have to wait and see until the market peaks up a little bit. If it wakes up, we still have Power Hour this year, or Power Hour today at 2:00, so 3:00. So we'll see if the market gets some momentum, but it would be really nice to see that S&P end at all-time highs. That'd be really cool. Bitcoin, 43 grand. There you go. Bitcoin, if you've been trading Bitcoin from like 40 to 43, I can just imagine the amount of people that if they understand the technicals have just been making a killing going back and forth on Bitcoin because it just goes up, it goes down, it goes up, it goes down, and you can trade it. But right now, Bitcoin at 43,000. Enphase 135. This was a good comeback story of the year. This was awesome for Enphase. Instacart $24. Palantir 1757. S&P 476. Let's see if some buyers come in towards the end of the day and we get some momentum. Big Billy says he's entering with 50 stocks this year. Carlos says 5 stocks, 40% other, 60% an ETF. Wes says 9 stocks, 1 option. Zokol says 7 stocks. John Stevens 19 stocks. Miguel 8 stocks. I have, I think, like 6 or 7 stocks I'm entering into the year with. In terms of stocks I'm bullish on, stocks I have some positions in. Toby says everything's a gamble. It's all about risk and what you're comfortable with and how you can minimize it. I agree as well. And I think 2023 was a good year of just like learning and understanding, what your risk tolerance is. Let's do this question. I want to pull up a video. I want to show you guys another clip. While I'm playing this clip, what is the best 2023 lesson you've learned in the stock market? Let's do that as a question. Let's get those in the chat. What is the best 2023 lesson, whether good or bad, that you learned that really was one of those lessons that you're going to remember for the next couple of years when it comes to stock market? And let's see what you guys had to say from that perspective. We did have Dan Ives yesterday on CNBC. Let's take a look at what he had to say about where big tech is going. So let's take a look at him. And then, in the chat, what is the best lesson you learned in the stock market? I'll share mine as well for 2023. All right, here's Dan Ives on Microsoft as his top pick going into 2024.
Wedbush's Dan Ives out with a new note, raising his price target on Microsoft from $425 to $450. Why? He's betting artificial intelligence will be Microsoft's iPhone moment. Dan Ives joins me now at Post 9. Dan, good to see you.
Yeah, great to be here.
So 450, I mean, it would seem not necessarily to be a layup. It's up 20% from here, but that's, $3.3 trillion market cap, I guess, at the current share count. It's 32 times 2025 calendar earnings. So how do we get there?
I think it's conservative. I mean, because the reason this is the iPhone moment for Nadella and Microsoft is because AI, the monetization opportunity. I mean, to put some numbers, we could be talking an incremental 25, 30, 40 billion per year. That's not factoring the street numbers. I think on the sum of the parts, you look at AI and cloud, you could actually get to 60, 70% of the valuation just from that. So I believe some of the parts, this is a stock. You have a year and a half, 4 trillion will be there.
25 billion plus in revenue by when and through what means? I'm sure that's not just $35 a head for the Copilot.
Yeah, I mean, our checks are showing transformational deal flow in terms of the Copilot conversions. I think the big thing here is really monetization is going to happen a lot sooner than I think the street's factoring in. 25 billion by 2025. I think that's sort of the baseline. Mm-hmm. But then you look to ultimately where this could lead. Based on our checks, for every $100 of Azure of cloud spend, we believe there's an incremental $35 to $40 for AI. And that's why right now it's another flex the muscles moment for Nadella and Redmond, because they are leading this AI arms race.
The idea of it being an iPhone moment, though, it would seem to me that when the iPhone was introduced, people didn't have really great expectations for it, right? It was kind of like this thing that was somewhat out of the blue, a lot of skepticism about how big the market was going to be for it. It feels as if we've got a lot of momentum of excitement around Microsoft already with regard to AI.
Yeah, no doubt. But I think the difference here is that the iPhone moment, it's from CEOs, CIOs, CTOs, what they're seeing on the use cases. I mean, use cases are exploding across the board. And I think that's really the most important thing here is that Nadella continues to ultimately really play chess, others playing checkers in this AI race. Now, of course, Amazon, Google, and others are going to follow, but the monetization in their own backyard, I still think massively underestimated by the street, which is why we believe 450. I think that's just the next step. As this is, in our opinion, it's a get out the popcorn moment for Microsoft in terms of where this is going.
How do you think about the New York Times Company lawsuit against Microsoft and OpenAI? Essentially saying that they're using copyrighted material to train the large language models, and they obviously want remedies along those lines.
Look, I think it's not just going to be in the New York Times. You're going to see others jump into this because they want a piece of their pie. I mean, that's really what's at stake here.
So Dan Ives is bullish on Microsoft as his top pick in terms of big tech returns, 450 price target. He's got Apple at 250. You know, it's an interesting question. Let me just pose this as well, and then I'm gonna go through the comments you guys had in the chat. I asked yesterday on X, Twitter, whatever the hell it's called, this platform that Elon bought, this question, and apparently a lot of people agreed that it was not going to be Microsoft, it was not going to be Nvidia that has the best of the big tech returns next year. It was going to be Tesla. I said, does Tesla beat the other Magnificent Six? Because Jesse said Tesla's going to beat everybody. And almost everyone in the chat said, yeah, it's going to be Tesla. I didn't expect that. I thought people were not that bullish for Tesla next year as a Magnificent Seven pick over all the other names. Quite frankly, I thought a lot of people would pick more Amazon or maybe Nvidia. But let me know in the chat as well if you think Tesla is the pick at the end of the day to outperform all of the other big seven companies. Okay, let's look at the lessons we learned in 2023. Let's go through them. So in the chat, we have dry powder. There will be dips. I agree. I mean, dude, it is so important to just have a couple grand on the side sometimes, because when there are dips, and also not needing to buy when things are running and just like let it being okay, because it will come down again. And if it comes down, you know, you will have the ability to get back in. Understanding valuation and intrinsic value. That's a big thing. That's a really, really, really big thing. Just because something runs up a lot doesn't mean it's overvalued. 1000%. I mean, this is a lot of people missed out on a lot of big names just because something runs up a lot, and you know that doesn't mean it's necessarily overvalued. If you believe in the business, get into the stock despite if it's already running. Meta, Nvidia, Amazon. I mean, that was, I think, the story of 2023. Everyone said at one point Meta and Nvidia in particular were overvalued because they had run so much. Nvidia was the big one. I mean, there was the short interest on Nvidia was ridiculous at $250. Like, I remember people are just like, no, it's like undervalued. And the suckers at 500 because they just kept growing. Google's supposed to be killed by ChatGPT. Do not sell the bear skin before killing it. Yeah, Google is not being killed by ChatGPT. Google is having increased competition. I've seen many new search apps coming up every single day, but ChatGPT has not killed Google yet. And if you didn't buy Google because of that, that probably wasn't your best bull thesis to do that. John says, don't buy a stock. Don't hold back on buying a stock just because it's expensive. 100%. Taking profit is good. Taking profit is always good. There's nothing wrong with taking profit. Felicia says, biggest mistake, listening to boys who make charts and didn't get enough Tesla at lows. Now I have way too much cash waiting for a buy. Yeah, I mean, that's another thing. When Tesla got to 100, when Palantir got to $7-8, if you're waiting for an even lower low, it's tough. It's because now, you know, you probably have to buy a lot higher from that perspective. But at least if you got some, that's okay. Oh my gosh, we got Kelly in the chat. Kelly just woke up. She's been a sleepyhead. Hi, Kelly. I hope you're doing well. I know Kelly was super sick last night, so everyone wish Kelly well. I basically gave her my cold. I had a cold for this past week, and then now I'm getting a lot better. And I was like, all right, here, you can have it. And I just threw it at her, and now she's super sick as well. Look at June ratting me out. No worries, Kelly. Amit was late too. Thanks, June. Thanks for ratting me out. It's like, yeah, it's no problem. Amit was late too. No worries. That's funny. Don't marry yourself to one stock. Agreed. Do not marry yourself to one stock. Angela, keeping 25% in money market cash. Wow. That is, yeah, if you're framing that as a mistake, 25% getting you 5%. And it probably wasn't 5% the whole year, right? It was probably like 4% in the beginning, and then it changed to 5%. That 25% of money could have done really well somewhere else as well. Yeah, it's a tough mistake I think everyone had to deal with. But I don't want to say it's a mistake because everyone thought the Fed was going higher for longer. Like everyone. Like you could have been the biggest bull of the biggest bull. Unless you were Tom Lee, which I think Tom Lee didn't expect the JPOW to be that dovish. You know, we expected it to be higher for longer, but he pivoted. He completely pivoted as well. It feels worse to be down after investing too much instead of being up after not investing enough. I was actually thinking about this yesterday, and that's a good question. It feels worse to be down after investing too much instead of being up after not investing enough. Would you rather be down on a stock and just have to DCA? Or would you rather not be in a stock at all as it runs up? Like, would you rather be down on Palantir with a $13 average when it's at 6 and have to DCA? Or would it be better to not be in Palantir when it's at $20 and you have no position? It's a really interesting question because I think a lot of people short term would rather just not be in the stock to not see the negative gains. But it is better, I think, to be down and just have the chance to DCA because you at least have the opportunity to get those gains eventually as the stock hopefully, continues to rise higher. So I think that's an interesting question to think about as well. DMNG says, when you have conviction, you don't have to worry about that. That is true. When you have conviction, I think a lot of it changes. Here's some of the lessons I learned in 2023. I'll go through my lessons and let me know if you guys kind of relate to them or not. Okay. I think the biggest thing one of the biggest things I learned in 2023 is what is your actual risk tolerance? Because you need to wake up every morning, not like looking at your portfolio and being scared. And I think the way to mitigate that from a risk tolerance perspective is two things. Number one, you have to have massive conviction in the company you buy, which is something that has changed for me over the past couple of years. Like 2-3 years ago, I would just buy any stock to just buy any stock. Now I actually do, I would say, a significant amount of due diligence on it. Like for SoFi, I didn't buy SoFi until May of this year because I just wasn't convinced. And then finally, or not May of this year, I didn't buy heavy until May of this year because I was buying here and there. But like May is when I was like, all right, I'm finally like really deep in. So I think the big buys are when you really understand the company at a deeper level. And that's when you start buying a lot more. If you are buying just for the hell of it, that's okay, as long as it's not a big buy, a couple shares here and there. But if it's a big buy, you should know the company. So when it comes to PayPal, I'm down on PayPal right now, but I think I understand PayPal very well. So I sleep like a baby at night knowing that I'm down on PayPal because I'm like, I know PayPal. And if I'm wrong on it, then all right, I'll be wrong in the next couple of years. But I don't think I'm wrong. And so I think conviction is a big thing. And that's one of the ways to mitigate the level of fear you have in regards to taking risks with your portfolio, because if you're not investing in the ETF or the index, you are taking risks. And if you're taking risks, then you need to have conviction around the stocks you're taking risks about. So I think that's one of the things. I think another thing for mitigating risk tolerance that I've learned is understanding the option strategies you have and the theta decay on those options. So again, one of the reasons I got out of all my 2025 options and I dumped them into 2026 is because I just didn't want to worry every day going into 2024 that I have options expiring soon, not knowing if those options were going to be okay. So for me, I like having, year out, 2-year out option strategies, which a lot of people say options is gambling. If you have 2 years for the gamble to happen, and really you're going to sell it within 14, 15 months, and you still have all that time left because you have those long options, I don't think it's gambling to that extent. I mean, I think the weekly options, monthly options are a little bit more gambling. So to me, I think that has helped with risk mitigation and risk tolerance as well. Did you buy PayPal, Ahmed? Yes, I bought PayPal. So that's one of the big lessons that I've learned. I think another lesson I learned is that you need to have an exit strategy as you get out of something. So if something's up a decent amount, right, there should be a strategy of like, all right, I'm going to take 15% of profits here. I'm going to take 20% profits here. I'm going to slowly scale out of the position as the position continues to rise, whether it's options or just stock in general. And I think that's a good strategy to have, because if you have that strategy, then you're actually able to pocket in some profits and you're able to have a long-term horizon on it. Now, for example, if you have something like Tesla and you want to hold it forever, that's fine, but you should still have some exit strategy. Meaning if Tesla gets to $400, you're going to take a couple shares off the table, right? Like that's not a big deal, because if anyone's even buying it at 250 to 400, not too bad. Then, you want to leave the rest until it gets to 600, then the rest until it gets to 800, and the rest at 1,000, right? So I think that strategy and having that mental clarity for every single position, no matter how small or big it is super important, because if you have that position, if you have that mental clarity, then you're going to be able to get out of those stocks and get into those stocks in a much better way. And then the final thing I would say I learned, final lesson, is that when your stocks go down, if you actually believe in the position, you should buy more. If you bought the company because of the first lesson, which means you had a real level of conviction, then when it goes down, that means you get to buy it at a better price and you get to DCA into it and have a way better return. And this is something I should have learned even better with Palantir when it went to $7, right? Because I was buying, but I just wasn't buying as much as I should have been buying at $7 and really reducing that $15 average. So to me, it's like when it goes down, you shouldn't get super scared unless something fundamentally around the thesis is broken. You should be excited. You should be really, really excited. Again, if Palantir gets to 13, 14, I am loading the boat. I am very excited today because I want Palantir at a better price. And it's one of those things that takes a while to learn in the stock market, but once you learn it, I think it does help at the end of the day. Bay Ray says, what Amit did not learn in 2023? Good jokes. I think we should make a compilation video of the jokes I put on this pod, on this Market Open stream this year. And I think it would. I think a lot of people would laugh. I mean, the Squid Games joke, iconic. The sweatshop joke, iconic. I mean, the fact that I can name these jokes off the top of my head means that my repository of jokes I've made on this market open stream is so strong because they're so memorable to me, and I know you guys remember them as I say them as well. It's one of those things where I think 2023 was a good year for comedy. It was a very, very good year for comedy at the end of the day. They were not dad jokes. Get out. Dude, they were intellectually stimulating. I put words together that should not be put together. They were not dad jokes. Okay. They were actual amalgamations that accentuated the level of Byzantine humor that created positive affective responses. So it was not dad jokes. Dad jokes is an insult. Okay. It wasn't dad jokes. I wish I had half the confidence in myself that Amit has in his jokes. All right, guys, let's end it off here. I think we're going to do the final word of the day of the year. What's the Oh, wow. I like this word. I've used this word many times. I've actually used this word many, many times. Before we get to word of the day, let's do one quick look at the markets. Let's see where we're ending out. And let's see. All right, S&P is down 476. ARK is down. Pound share 1745. CleanSpark. Oh, wow. CleanSpark is dropping 6.7%. So CleanSpark down 7%. Why is CleanSpark dropping? Because Bitcoin's down 2%, Riot's down 2.9%, Marathon's down 2.85%, Robinhood 12.98. We're seeing some red, folks. SoFi 9 cents away from below 10. Tesla's at 253. Tesla's at 260. Apple 193. We've got a sell-off at the end of the year. Oh my. We thought we would get a rally. We're getting a sell-off. Let's see. Maybe the dip gets bought up, but we're seeing a pretty decent sell-off. So yeah, I guess I guess that beautiful literal end of year day rally we wanted to see. Maybe we get it, maybe we don't. I'll be monitoring the market throughout the day, so we'll see what ends up happening towards the end of the day. If you're not following me on Twitter, please follow on Twitter. It's in the description. Twitter is where I'll be tracking where this market goes. But so far, we got a little bit of a red market. Pound share at 1745, S&P at 476, Robinhood at 1298, pound share 1745, and S&P 476. We need 3 points to get to all-time highs on the S&P. Let's see if we get there. Okay, so word of the day. This is the final word of the day, guys. Final word of the day. It's pretty special, quite frankly. I want to know how many market opens have we actually done this year? Because I know I missed one in January and I missed one in May. In May, I had to take my mom to the hospital. In January, I went to New York in the morning. But outside of those 2 days, I don't think I missed a single market open. I wish I numbered these I should like put a number on these market open. That's what I'll do. January 1st, I'll put a number on the market open. I don't think I think I missed 2 market opens this whole year. So I think we've been pretty consistent this year, which means we've had a lot of word of the days, even though we started this back in May. But word of the day is kerfuffle.
Kerfuffle.
Yo, they have the weirdest voice actors on this.
Kerfuffle.
She sounds so nice. Sometimes they have these old men saying the words, and then you have
kerfuffle.
She sounds so attractive. That's the issue to me. It's like she sound like I want to get to know this girl, like with that voice. Kerfuffle. Like she sounds interesting. Anyway, kerfuffle. A fuss, a commotion. A fuss or commotion. So I like this word. If you're ever in a fuss or a commotion with someone, or if you're ever in an issue with someone, I mean, kerfuffle. That's not bad. I like that. Kerfuffle. You are in a little bit of a kerfuffle with somebody. So I like this. The only reason I'm saying that is because she sounds like Kelly. So that's, I mean,
kerfuffle.
She sounds like Kelly. Now, some of you guys have never heard what Kelly sounds like. Maybe on New Year's, if someone wants to do a stream with me live on the channel, put it in the chat. Let's see that. Would you guys like a New Year's Eve stream with Mrs. Kelly on New Year's Eve? Would you guys like that? Put in the chat. Put a 1 in the chat if you would like that. Because maybe we can convince the dictionary lady to actually do a stream on New Year's Eve because I feel like a lot of you guys would enjoy that. That would be really fun. I feel like a lot of you guys would enjoy that. Kelly says she sounds like a teacher. She low-key does, bro. She kind of does.
Kerfuffle.
Dude, her voice is just so attractive. She's just like so nice. Like, I want to know what voice actress they got for that. Kerfuffle. We got a lot of ones in the chat. A lot of people want to see us. So basically, Kelly and I were just going to get on Zoom for New Year's Eve and just have like a little Zoom date. But it seems like the whole chat would like to be part of that Zoom date. So I don't know, guys. Look, I'm not opposed to it. I'm down to do a little stream on New Year's Eve. It's up to her. So if it doesn't happen, you guys know who to blame. I won't roast you like I do admit, dude. By the way, Bay Ray, Kelly was expecting a better roast on our Pouncer stream we had, and you didn't really come through. I mean, you tried, but you didn't. So maybe you're gonna have to step your game up. So we'll see. In terms of a general New Year's Eve stream, I know a lot of people were asking. New Year's Eve is what, in 2 days? I don't know if I'm gonna be able to do a full New Year's Eve stream. Maybe in the beginning of the day, maybe. We'll see. I am gonna put out a new schedule for YouTube on New Year's Eve and see what you guys think going into January 1st. I have a bunch of announcements going into the new year, like a lot of stuff I have to tell you guys, a lot of different life changes, different stuff going on, whole new schedule for the channel. TLDR, we're going to be streaming like 4 times a day in the new year. So we're really taking YouTube to the next level in 2024. A lot of different life changes. So I have a lot of stuff to tell you guys. So I'm going to be putting out some stuff over the next couple of days, but yeah, I don't know if we'll be able to stream New Year's Eve. If we do, maybe me and Kelly stream, probably not. But if not, January 1st, we will be back and we'll be doing what we got to do. Okay. I think that's it. I think that's it. Myra says, Happy New Year's Eve, Amit, and friends. Thanks for giving us the morning. See you next year. Yeah. If I don't see you guys until January 1st, Happy New Year's Eve, or Happy New Year's in general. Happy holidays. I hope you guys spent some time with your family. Hope you guys got to eat some good food. Hope you guys got to plan out your New Year's Eve or New Year's resolutions. Hope you guys have enjoyed the market open, because I've enjoyed it more than you can imagine towards the end of the year. I think in September, when we switched to the 75-minute show starting at 8:45 versus at 9:20, it really opened the possibilities of what this market open could be. And in 2024, I can promise you that I'm going to be smarter. I'm going to be more researched. I'm going to be better well-read. I mean, literally last night, I was fucking sick. Instead of watching Netflix, I was watching, there's this YouTube channel called Options Alpha. I was like learning more about bid-ask spreads and like the psychology and technicalities of having an order fill and like how wide the margin has to, like, that's what I was watching last night for like 20 minutes. I was like diligently trying to understand this fucking shit so I could explain it to you guys, or like help explain it more on the market open. So I think we're going to 10x the knowledge repository I have, and hopefully 10x the communication skills. Obviously the comedy doesn't need to 10x because that's already at a top, and it can get higher, but it's at a good level. So I think the market open is just going to get better and better and better. And so it's going to be exciting. It's going to be super fun. Thank you to everybody for joining the stream. And yeah, I look, there's no many words I have to say. I mean, my mom still doesn't even understand. She's like, you have 700, 800 people that just listen to you. I was like, yeah, it's like, it's a market open stream. People want to join and people want to get some information. And we're going to do market close. I think I told you guys that a couple of weeks, and it's starting in January 1st. So we will be doing market close every day. And based on the consistency of market open, I think you guys can count on my consistency for market close, because we barely missed in 2023. And then we have a couple other streams we're doing every single day. So 2024 is going to be a big work year, and let's see what we can do and keep going from there. We're gonna try to really take this to the next level. And I'm just so appreciative that you guys have joined every single day. It means the world to me. It's super exciting. Like it's just the coolest thing in the world. I just fucking love it. I just can't. Number one, I kind of think this is something I'm built for. And it's something I just love to do. It's something exciting. And I look at some of the other, YouTube market open streams outside of Meet Kevin, some of the other people that have attempted to do it. And I look at kind of like how they do it, how they position it, what audience they're getting, all this stuff. And then I look at what we have here, and I genuinely think this can be bigger and better than all of those outside of Meet Kevin, because Meet Kevin he's just really big. Maybe one day, but Meet Kevin's just really big. But outside of the other competition I'm seeing, I'm like, dude, I think this can be one of the best things on YouTube, quite frankly. And then, and as a result of that, I think we can get the attention of a lot of the other bigger people that exist in the finance world. I mean, even Tom Lee yesterday, he I think you guys saw some of that tweet I said yesterday. I was like, yo, can we get you on the channel? And he was like, DM this email he has or whatever. So like, we're going after the big guys next year. We're trying to get the really, really big guys to legitimize the channel and take this to the next level. So I'm super excited. It's going to be super fun. I'm going to be in California January 16th for work. I think you guys are going to be really excited for what I'm doing in California. I'm going to be there for literally 24 hours. So we're doing something fun in Cali. I know a lot of you guys hit me up saying come to North Cali. It's going to be hard to come to North Cali. I'm going to be in LA, but we're going to be there for 24 hours. Gotta record one thing, and then I'm back to New Jersey. So we will miss the market open that day. That is going to be the one day we're missing the market open. The other January 17th, we'll probably do the market open from the airport. But I think you guys will enjoy it. It'll be fun. And we'll just keep going. We will just keep freaking going, because it's going to be super, super fun at the end of the day. 10x the crazy suits. Yeah, that's the other thing. I need to 10x the wardrobe, dude. Because the thing about the market open is like, the goal is to wake up many hours before 8:45 when I go live. And at 8:45, I want to have the 2 screens, the iPad, everything I need to be able to operate. I need to have the articles I want ready to go. I want to also connect the iPad through an HDMI so I can like highlight stuff on the iPad while I'm reading the articles and you guys can see stuff. And I also need to have the outfits in accordance. Like I want to have like 7 outfits ready to go, and I want them to be ironed and all like legit. And like every Monday, Tuesday, Wednesday, I just step into the outfit. So I want to make sure the wardrobe is in the right position and everything's kind of scheduled and everything's good to go. So, because I'm going to be wearing the same thing on market close as well, right? So if I'm wearing this blue shirt on market open, I'm going to be wearing this the whole day for market close. So I want to make sure like the wardrobe is set in the right place and everything's organized and all that shit is good to go. CleanSpark down 10%, folks, 1172 on CleanSpark. So we got a nice little sell-off on the Bitcoin energy miners on a lot of these companies today. Selling off, heading into the last day of the year. Basically, people taking their profits. It makes sense. People taking their profits. So it is what it is. We'll see what happens as we get into the new year. All right. That's it for me. Thank you, everybody. I appreciate you guys. If you buy clothing for the podcast, you can tax deduct them as a business expense. Yeah, I've tax deducted a lot of things as a business expense, so you don't got to tell me twice. I always have some justification, but there's always something that I find a way to tax deduct. All right, that's it for me, folks. I wish I could stay on longer because Fridays I stay on longer, but at this point I just can't keep talking because you guys hear it in my voice. We got to get better. We got to recover, but we should be good. New Year's Eve stream, maybe not. Probably not. So if not, then January 1st, we will be live, back in action, back in motion to start off 2024. That's it for me. Love you guys. Appreciate you guys. Means the world. This microphone that I'm holding, it feels so much more intimate holding this microphone. I don't want to end it. It's like I want to leave, but I don't want to end it. You know that feeling? It's like I don't want to leave, but I gotta go. I gotta go do some stuff. I gotta go fix my throat. The throat has there's a lot of mucus in the throat. I gotta clear it up so the throat gets deeper. Like to have a deep throat so that I can speak a lot of different things. And we'll keep going from there. Thank you, everybody. Does this kind of sound like you're listening to the radio right here as my voice gets deeper? It's like you're on KISS 101 FM. All right, that's it. Thank you, everybody. Loved you all this year, and we will see you in 2024. Bye, everybody. See you guys. Thank you. Good night. Have a good one. 2024. Let's go.